Good morning or afternoon, Quasar Markets Live. Happy Liberation Day there, Mr. Spano. Kirk Spano here with us today from Fundamental Trends. How are you doing so far?
I am doing well, and my Sicilian relatives would correct you. It's Spano.
Oh,
It's
sorry.
Spano, you're so American.
Yep, I am for sure.
What are we liberated from?
I guess tariffs from Canada. It looks like they were the first to sort of want to come to the table, so we'll see. I don't know. That's what everybody else is talking about. How you feeling about the markets these days?
Well, you know that I am probably neutral to bearish on this year, as Big Beats has probably mentioned to you. I switched from neutral the first month or two of the year to bearish since February, and I am expecting some sort of a rally, especially when the reconciliation bill comes in. I don't know how that manifests over the balance of the year. I'm still not a believer in the valuations out there. I think it all comes down to liquidity. I think that is the number one quant factor. I was a quant way before it was cool. Yeah, you just got to follow the money, right? Grandpa gave me advice in college. He said, if you want to know how something works, follow the money.
Absolutely.
And I'm following the money. And I think it's going to be a great year for traders. Good traders are going to kill it.
Yep.
But I think that people who are position traders, I'm more of a position trader. I'm looking to buy those. I'm looking to buy two things. I'm looking to buy established uptrends, which I think are mostly broken right now, or I'm trying to buy pivot points back to the upside. So I have a couple to show you today, and I listened to Big Beat earlier today. So if you want to talk energy, we can talk energy. There's a lot of things. I thought we'd probably start with the yen, though, because I think the yen carry trade's been pretty important, for a couple days anyway.
Absolutely has been.
Or a couple decades.
Yeah, Warren Buffett is, one of the firm believers in that, made a ton of money on that trade, and getting into the Japanese trading houses for him was, and we know he's been piling in still into those.
Right. And so the question becomes is what is the trade there? And I don't think it's an easy trade. I think it was a much easier trade back in here when Buffett started to accumulate, and then the yen came down. And the question is, what does the yen do?
You're showing your website right now.
Yes, I am. Share this tab instead.
There we go.
I'm getting to know Streamy here. StreamYard. All right. Sorry about that.
No problem.
So we've got the yen, and Buffett was buying where that green box is, right? That's when he started to accumulate. The yen came down. So a lot of those trading houses, all five of those trading houses have gone way up as the yen came down. And I think Goldman Sachs put out a note yesterday or the day before talking about the yen being maybe the easiest trade over the next year. Not huge upside, but if you're a futures trader, it can be huge upside. So I think futures traders are all over this already. But I think that the yen probably challenges, 5-year highs. I don't know about, 15, 20-year highs, but I think probably 5-year, 10-year highs, right. This plateau here, I think we're going to get back to. So that's a 30, 40, 50% move.
To the upside, yeah, definitely. And we've seen it in the Nikkei, the drop in the Nikkei. So what would be the play? Would it be just straight looking at the currency itself?
Again, so I haven't traded futures in a long time, but I do think the futures traders can probably kill it here if you're a good futures trader. For me, I'm an equity guy, so I am actually looking at those 5 trading houses that Buffett has bought to see if there are some dips in a couple of them. If I can wrap my head around understanding them, I think are probably buys. I think that there are other companies in Japan that are less dependent on U.S. trade that you probably look at, the companies that service Asia and to an extent Europe. So I have a basket that I'm researching. I don't know what I'm going to buy yet. But again, I'm a position trader. These little moves to me aren't important, right? I'm not a day-to-day guy, week-to-week guy. I'm a quarter-to-quarter, year-to-year guy.
Sure.
And I want to use these narratives to find some of those inflection points.
Absolutely. What else are you looking at nowadays?
I saw Big Beat talked about Brazil,
Yeah.
and here's a long-term chart of Brazil. I think the downtrend is not complete yet. However, I think the question you have to ask about Brazil is, in a world where they have the ability to export resources and where technology is equalizing a lot of things, if they can get over their political strife, I think there's an inflection point coming up. Now, I don't know if it challenges 2020 lows or 2016 lows, but this area in here where it already almost touched,
You're
I
still
think
showing the yen here.
oh man, I change it.
Right.
I'm sorry about that. I change it on my screen, and I have
Yeah.
to keep hitting the tab button. This is new software for me. I'm a
Yeah.
Zoom
No
kid.
problem.
Yeah. So in any case, you take a look at Brazil, the ETF, and these giant moves are the easy ones to play. And right now, I would call this the middle of the market.
Right.
I want to see it hit this trend line or maybe have an extended down wave before I really get involved. I don't know if this is the level it gets to or if this is the level it gets to. We'll have to mind the momentum in real time. But
Sure.
when it inflects to the upside, I think it could go on a 2, 3, 4 year rally, especially if the dollar is weaker. We know that the international investments do better as the dollar weakens.
Absolutely.
I see that coming. I think President Trump wants that. I think it makes it a little challenging to be a long-term investor in the United States market from the standpoint of just set it and forget it. I do think the trading and the stock picking wins. I think the indexing suffers. But I think the biggest money, if you can catch the inflections, are going to be these international markets.
Yeah, I mean, I can't argue with that at all. It's definitely everything is based right now around the tariffs. Are you looking at any of those defensive plays that, as we said, energy or anything like that as a sector at all, or you'd rather be outside of the U.S. right now?
So in the U.S., I'm relatively heavy relative to the index in energy. And the reason being is that I have pretty good connections in energy. I've been an energy analyst 25 years. That's how I got on Market Watch. They like my energy analysis. I was one of the first people to call the shale boom right before Citigroup and Goldman Sachs did it. So I get how that's all working. I understand how the tier 1 and tier 2 capital are working out. I understand replacement costs. I understand refining industry. Pipeline takeaway is good again. So you have a mature market in energy. But I think people don't understand is that energy demand was relatively flat for a decade. And now that we're building all the AI data centers and some Bitcoin, but the AI data centers, that is the number one driver of electric needs.
Absolutely.
And we're going to get growth of 30 to 50% over the next 5 to 10 years. So it's not gigantic, but we don't have that electricity generation capacity right now. And there's only 2 ways to do it fast. So I can talk about both of the trades that I have left here that I think will do well. And I called energy the trade of the year because I thought it'd be one of the only green sectors. I think that when you take a look at, and I don't have charts, we'll get to the clean energy, but the natural gas as opposed to oil, you have to understand that when you talk about oil and you talk about gluts or you talk about shortages, it's all manipulated.
Yeah.
Because the Middle East has enough oil to supply us for 30, 40, 50 years easy. And what we have in the United States is light sweet crude Of course, we built the refineries based on heavy sour decades ago. So it is not easy to convert those refineries, which means that you need trade of light sweet crude, essentially swaps, for heavy sour, which we can get from the Middle East or Canada, theoretically Venezuela. We'll see how that goes.
Yeah.
And the energy guys, and I was lucky enough to talk to CEO Foran of Matador back in May, ask him a few questions, and he made a statement: either you're trading energy, or you own it forever, or you just get completely out, which seems like the three ways of anything. But his point was, energy is not an always up trade anymore. We're just going to have a cycle here where it probably goes up, and natural gas is going to beat the hell out of oil. It's got a longer ramp. There's a shortage of natural gas because about half of it is affiliated to oil production. And if oil production is flat, which it has been the last couple of quarters, it's probably not going to go up. Chevron already said that they're not going to increase production in Texas. We have an artificial shortage of oil coming between now and whenever mileage on vehicles, which is about half of oil demand, goes up dramatically. And that probably doesn't happen for years.
Right.
So we could see this market where it costs $60, $60 a barrel really to replace the oil that we're using up. So that's tier one capital. It's almost all gone. Scott Sheffield from Pioneer told us that a couple weeks ago. So they're moving to tier two and tier three oil, and it's just more expensive to get out of the ground. So we really can't see oil prices below 60, or they just stop pumping.
Right.
And that's a problem for everybody, because then you don't get as much
Didn't he even use like an $80 price?
Yeah, and the Saudis for sure want an $80 price. So I don't think that drill baby drill is a thing for a couple of reasons. One, you just can't drive the price down and then expect them to keep drilling, right? I mean, the cure for low prices is low prices.
So like you said, the refineries, we don't have enough capacity.
Well, for the light sweet, we have to
Right.
swap it for heavy. And I know Steve said something about the Keystone Pipeline. To me, and I'm an environmentalist, I thought that they needed to find a way to get the Keystone done without going over the aquifer that they were threatening. I mean, the company that handles that pipeline is not a very, they don't have a good track record on safety. So you didn't want to ruin one of the biggest aquifers in America. But we need Canadian crude. And so I don't know how we fix that other than you see a lot of trucks and trains with crude oil for the foreseeable future. The Saudi Arabia, which owns the biggest refinery in America, bring extra crude oil, probably. Venezuela, I think, is kind of inconsequential at this point. So I just think you see a range-bound, and I've said this on 10 other shows, range-bound oil for a very long time. But natural gas, the demand is increasing a lot, whereas oil demand is flat. So what happens with natural gas? Well, there's only two things that you can do. You get a lot more natural gas, which means Marcellus, and then the western half of the Permian Basin, which is the Delaware, versus the Midland. The Midland, good TV show, right? Everybody's watching Landman now. But, the Delaware, that's where the natural gas and the natural gas liquids are. So that's going to do well. You take a look at a stock like Permian Resources. They are set up to either just gush profits or be sold.
Right.
Katera Energy, I think, is another one. So I look at the natural gas heavy oil stocks because the natural gas stocks are already up. So the gas heavy oil stocks is where you can find value, and they're buyouts, right? They're in this administration, they're going to be bought out because you're going to have Exxon and Chevron and EOG and Conoco and BP allowed to buy the mid-sized companies, which Biden wasn't allowing. So we're probably in Lina Khan, right? I can tell you at that oil conference, I did not hear anybody say nice things about Lina Khan.
You won't hear anybody at any business conference say anything nice about Lina Khan.
Yeah. She, she was very, very anti-monopoly and oligopoly. I get it. I mean, that's probably the right thing for consumers in most industries. But in energy, you need economies of scale. And I think that the economies of scale are actually good for consumers in this
Right.
particular industry. I don't know if that makes sense in banking, but I think in energy production, which they've been going to longer and longer laterals because the oil is harder to get and the gas is harder to get. You just need bigger hunks of land controlled by fewer players so that they can justify putting the drill bit in the ground.
Right.
I really like the natural gas. What was that?
It has to be profitable for them to do it.
Right. And I will tell you, I think the private equity guys are usually the smartest guys in the room. They are all cashing out. They are all talking about 5 to 10 years of upside in oil and gas, longer on the gas, shorter on the oil. Had to do with production and supply and demand curves. And they're in their cash out phase over the next 5 years, and they're moving on to other things. And what they're moving on to, if it's not just outright buying land for the sake of owning land in agriculture, that's really what they're looking at. They're looking at agriculture and they're looking at clean energy. And so I see some of these spikes in clean energy when you get these giant FOMOs. And I think we're closing in on a giant FOMO in clean energy. We know the millennials, which are the money at the margin, they love this stuff. Yep. And when these start to show some momentum to the upside, and they seem to be in bottoming processes now, they're going to break out, and you're going to see rallies like this, right? That's what's going to happen. I don't know if it goes down one more leg. I suspect that it can on volatility this year, but I am actively looking for entries, and I'll probably start scaling in with cash secured puts through the end of the year. And if we get a blow off bottom, I'm just going to back up the truck, because you take a look at iClean, ICLN, if you just want to own a fund. You take a look at TAN, I got that one right. You take a look at TAN, the solar ETF. This one looks like it's putting in a bottoming process. I think it might have one more little leg down again on volatility, but there is a pretty good floor in here. You start to see the sellers disappear just about where we're at right now. So there's not a lot of selling pressure here. So I'm looking at getting into, I'm already in natural gas. I would tell people, take a look at the Coterra chart and take a look at the Permian Resources chart. I think that you can buy these, right, uptrend on a consolidation. Mm-hmm. And, it's probably, did I share it? I did.
Yeah, you do great.
I think you're probably going to bounce up here. The part value of this company is about double the current price. It depends on what valuations are, what somebody's willing to write a check for, how the executives want to get paid, if they want to get paid in cash or in shares or a combination, right? There's two guys that are primary big shareholders of this company, and the guys that started it. Permian Resources, I'd be buying the dips on this one. I know that it's worth around 30. It's trading below 15 right now, and you could probably trade options on this one pretty effectively. Because I think you can help spin it up, actually. Right. So when it moves to 30-ish, it's going to be a pretty quick move. And
you can see there's no resistance.
Yeah. So these are the dips you want to buy. Again, if we get a recession if we get more than a recession scare and we get an actual recession, then everything has another leg down, right? So you have to be cognizant of that. I really like the clean energy, though. I'll tell you, I think that TAN, it's very optionable, right? It's very optionable. And I think that it has the millennial imagination. Yep. I don't think it thrives on tax breaks. I think it thrives on technological advancement. We know that in the next 2 to 3 years, the new solar panels and the new batteries all have huge efficiency upgrades, to the point where solar today, during the day, it's the cheapest form of energy. Because you got to hold it overnight in a battery, that makes it the same as the cost of natural gas. But as this next generation of technology, it's going to make solar the cheapest form of energy compared to anything ever, right? And people say, what about nuclear? Well, okay, build me one tomorrow, right? Can't do it. So, solar, you can slap it up there pretty quick. I think that solar next year has a big up year. And I will tell you, I don't see quantitative easing coming until next year. And I think that'll be a big catalyst. There's certain liquidity things to circle back and finish with liquidity. You have liquidity from the boomers.
Yep.
You have liquidity from the millennials, who are the new money that are just going to their peak earning years. And you have money from international markets, and you have money from the quantitative easing if they do it. I think the international markets are going to be hard on America. Maybe this entire administration. We'll see. I think, I don't think they're going to buy as many bonds. I already know that they're not buying the stocks, right? The last two months, equities from overseas and money for equities from overseas has gone down. So I think that one of the demands for U.S. securities is going to be less in the next 2, 3, 4 years than it was in the last 2, 3 years. And that means that, okay, the boomers are about to go into net redemption. That happens in the next several years. The corporate pensions are still taking a little bit of money, but the public pensions are already in outflow. So that's a net seller of equities and U.S. Treasuries.
Right.
The millennials, although they're big earners and they're the money at the margin, they don't quite move the needle by themselves. The day-to-day volatility they can create, but they really can't push something up without extra money. And where did the extra money come from last time? Came from quantitative easing.
Right.
I think that next year, because of the U.S. debt, you probably get quantitative easing. I don't know if Powell does it, but either he does or the next Fed chairman does, because there's just too much debt for us to refinance, and we're going to have to stretch it out over a long period of time. I think you probably get some sort of special U.S. Treasury specifically designed to bail us out. And I think they're 30-year and 50-year bonds. They're already talking about it. You read anything from the big think tanks or from the big universities. If they do a special bond at a 3% interest rate for 30 to 50 years and the Fed buys it, right, they can bail us out for 30 to 50 years, and it's a one-time thing. That money, theoretically in our career, crowding out has been theoretical, right? Crowding out has never happened to the United States. It's about to. So all the money that flows in from the QE won't really go into equities and asset prices. A lot of it's just going to sit there doing nothing because it's a bailout and it doesn't flow back in.
Right.
I think that we're still going to get big rallies, but I think the rest of this decade is tough. So unless you're a stock picker or a trader and you have some concept of the macro around the global debt picture and the U.S. debt picture, and don't just be hopeless and, everything's going to hell. No, it's a process. But the process doesn't take 2 quarters. It might take 5 years. And I think people have a hard time with 5-year time frames, especially 10 and 20-year time frames. I mean, how many people have a hard time planning next year's vacation?
Me.
So, right. So I just think that as a position trader, I am very worried about 1 more leg down or 2 more legs down, elongated drops, head and shoulders that look distorted with bigger drops on the right side and faster. But I do think that follow the money that Grandpa gave me way back in college still holds. And as QE comes in, remember, boomers are essentially flat to net sellers. What do the millennials want to own? The millennials want to own Bitcoin. They want to own clean energy. They want to own technology. And those are the places you have to look.
Yeah, it's going to be a different day. It's not our parents and grandparents or even us anymore. It's the next generation. Well, thank you so much, Kirk, for joining us. And we'll, value all of that. a little bit bearish for the short term, but again, positioning is key, as he's put it. Not every trade needs to be a trade, and I think that's one of the biggest takeaways I have. Thank you so much. We'll see you next time.
All right.
Now coming up, we are going to have Agnieszka Wood back to tell us how to handle Liberation Day here. So let's bring her into the channel. Agnieszka, how are you doing today?
Hi, I'm doing well. How are you?
I'm doing fantastic. So how are you handling Liberation Day?
That's a very good question. Actually, pretty good, waiting what's going to happen. I mean, the morning is fantastic. I mean, the stocks I'm trading are going up like there is no tomorrow.
That's fantastic.
I'm always really curious about, what is going to happen at 4, right? Because the market is closed. What do you do? What decision you make? Are you closing your positions when you are swing trader? I mean, when day trader, it's a very different thing. But for swing trader,
I mean, it is. I'd ask you as our mindset coach. How are you positioning? But for me personally, I said it this morning. I thought we'd have a small melt up throughout the day. As to what happens overnight, I've also sort of said the last couple of days, I think it's a sell the news event in that everyone thinks the world's ending. And you know what? We're going to wake up tomorrow and we're going to eat breakfast and, we're going to pet our dogs and, we're going to kick the cat. I'm just kidding. I don't have a cat. But, whatever it is going to happen. And that's my personal opinion. I plan on being pretty neutral in positions tonight. My Bitcoin, long Bitcoin's going to stay long Bitcoin and, some defensive positions. But, for me, I've been really watching the VIX the last few days as a guide to start to lead me to what I'm doing. And right now it's, to me in that lower tier of the elevated state. So I'm okay. I don't like it up in that 23.44 or above.
Yeah, I think from the mindset perspective, I think it's really important not to be reactive and not to panic. And to be honest, over the last 3 months, there was nothing else than always some sort of news that you can react to. So staying within your plan, I think this is your best bet. Don't try to make, try to predict the market, what is going to happen. Also, I think trying to stay away from that fear, from that panic, like as you say, the world is.
I don't know if you saw the fear and greed factor is at 15. I've never seen it that low in the stock market. Wow. 15. That's a 100-point scale.
Yeah. That says definitely a lot. But that is what you see
before the sun comes. Yeah, I mean that's what I mean. Again, I am of the view that I don't want to say we've bottomed because I don't know that we've bottomed, but I think we're at that. I hate because now it's a cliche. I was saying it, a week ago. The tradable bottom was close, right? We're at that area where I do think, at 15, how much more capitulation can you get? What do you got? 5, maybe 5% because historically we've never gone below 10, I believe. So, if you say that,
never say never, right? Never say never.
You never say never because the markets can be irrational much longer than we can stay solvent, which is why we're saying have money on the sidelines. So we're on the opposite side of that anyways, is, Steve, and just the general, I think, view. You probably heard a little bit of Kirk before you. Who's saying I'd rather have money. I will say for a lot of us, we're advising swing traders, don't. If you're not a day trader right now, then you know what? Watch what's going on. Enjoy it. Take time to get your charts ready, get your wish lists, get your theses sort of rounded up. And if the inevitable happens, then you're ready for it. You don't have to trade.
I think this is the best opportunity for any sort of trader that is still struggling is to take this time and really learn to trade what you see.
Yeah.
Because there's a lot of narrative, a lot of fear, a lot of things going on, but eventually what really matters is what you have in front of you. So being focused and staying true to I don't know what everyone is saying, but this is what I'm seeing on the chart. If you're a technical trader, trade the chart. Don't trade the narrative. If you're a day trader, even more so,
You
trade the
should never
chart.
trade. I mean, that is only the chart. A day trader is
Yeah.
what, is.
Yeah, but that in theory, yes, in theory. But when you are a day trader, a lot of times you trade the bias. And I talk on a daily basis with traders that tell me, yeah, and before the market, these are the things I'm looking at, and that gives me an idea when this chart is gonna go. I'm like, really? How does this give you an idea? Did you backtest it actually? No. Oh, so this is just some sort of an idea, like literally an idea you make up to make yourself feel more secure. But really what is real is what you see on the chart. Where is it actually going? And then make your thesis based on the move that is actually happening. Because you always have to have thesis, right? It's not like, there's not many traders that just jump in and then suddenly everything works. It's like, I don't know.
And if it did, that's just luck, and we don't
Yeah.
trade with luck. We
Yeah.
trade
So you
with
have to have
thesis
some sort of
always.
idea.
Yes. Yeah. No. I mean, and again, a thesis doesn't have to be that complex. My thesis
Usually it
was
isn't.
if VIX dropped below 2234 and the market started to go green, I feel it's just going to melt up. I'm going to put a position on the Qs with a trailing stop and let it just sort of go in and set it and forget it. That's my thesis. It wasn't very hard. It's also not that very brilliant, and it doesn't always work, by any means.
But that's the thing, it doesn't have to.
Yeah, it just and it's in profit. So now all I've got to do is just wait. It's just been, and what we've seen is this irrational trading in the morning at the cash open that just is just insane. And I still can't. And Steve said it. If Steve, who with 40 years of experience of doing this, can't figure it out and is avoiding it, then why retail is doing it, I don't know. So to speak, is. I'm just watching these things battle out and then, wait for the formation of the day to actually form, which I'm seeing doesn't start till 9:50. And then you can start to kind of watching the irrationals, and I guess that's what it is there's so many irrational traders that made a position yesterday just before close with hope and a prayer that they'd wake up to it in profit. And then when it isn't, if it is, they sell, and if it isn't, they sell. So it causes these irrational moves in the morning.
Yeah. And, I have been in those situations, so I will be the last one who will judge anyone who trades.
Right. No, I mean, I don't judge those people. I'm just explaining why there's volatility, why it's sort of irrational, and why I won't trade it. I'd rather just not,
Yeah.
For me,
and I think you grew into that, right? That there's a certain point where you grow into that trader that is willing to wait. That is willing
absolutely.
to just sit there and watch.
Yeah, no, you're right. It absolutely is. You get a calmness about it. You see the patterns and that seem to play out time and time again. It doesn't mean they're going to play out the next time, but again, I'm looking at every time frame I've got here, and that's a nice looking chart on the Qs at the highs of the day, 475.67. Just broke that resistance on that chart. It's been riding the one, the one standard deviation up right across it. All of the trend lines are going in the same direction. So, what it is again at 15. What I'll start to point out is at 15 on the fear and greed. There's we know the market, it looks for the way of least resistance. We're running out of sellers. Could there be another run of them? Yeah. If Trump comes out and says, nope, we're at 25% across the board, and that's what comes out at 4:00. Yeah, I don't, you're going to wake up tomorrow. That's why I'm going to be neutral. But up until 4:00, I don't see anything that changes sort of my thesis on the market. So that's how I'm trading it.
Yeah, so you do trade what you see and not what might happen at 4:00, because if you do that, you're actually wasting the whole day just because.
And I know so many people that will. There's so many people that are waiting till like 3:30 today to make decisions, and they think they're going to beat the market. Those are gamblers. That's not what we promote here. It's not what we want to see. What we want to see is, we said it this morning, there was good money to be made in scalping and trading, on a day trade today. And the bias for us was to the upside, and it's playing out. Is it set in stone? No. The other day we were very wrong. Although it was actually Steve that was wrong and I was right on which way it was. Hopefully he didn't hear that. He's in a meeting, but it was true too. It was actually funny. We had two of our other educational partners that came on, that sort of chimed into our chats, on social media. And one of them went with Steve that they were bullish for the day, and the other with me, Lucky Markets, was of the philosophy that it was going to be a bearish day. And it was when we had one of those 1.5 moves. And what it was is at that point, fear and greed was at like 30, 35. And I knew that that the final capitulation hadn't come. And that's what I was looking for. And then it came. And from there, like I said, can it be irrational selling that continues to happen? Absolutely. We've seen it in the past, and bad news, very bad news will do that. But I think that people, to me, bad news has already been beaten up so much that it's that law of diminishing return, I call it too.
Yeah, I was just thinking I think when you are so caught up in that roller coaster, a lot of times it's very difficult to detach from it and really see the rational decisions, and see that the more you simplify your process, the more you simplify your thesis, the easier it all becomes. The more information, the more speculation and everything you throw into the mix, it just becomes difficult to make any decision. And that is, I think, key for many traders, especially retail traders, who don't have a boss above them that they have to report to and say, right, why did they make certain decisions. That is very easy to start clinging onto things and clinging onto losing trades or to your own thesis and trying to be right. All those behaviors are very easy to be prevented if you understand that there is nothing that you have to attach or that you should be attaching yourself to, and you learn to detach yourself from it, because everything in the market is moving and changing and constantly changing. And the moment that you start clinging onto things, it becomes really difficult to stay standing, because everything is moving, and you're like trying to cling onto things that are changing, so you're getting stuck. And literally people say, I'm stuck. Yes, stop holding onto your thesis, because the situation has already changed. It's time to change your thesis. Stop holding onto your approach. Yes, it has been working, I understand, but now the market has changed and it's not working, so you've got to adapt.
Yeah, you said it right, that you can, we all have emotions, and it's okay to have emotions, but we don't want to be emotional traders.
Right.
And we have to pull them away. And that's a part of it is, I've been bearish, and now it's turning. Like, you have to watch the market and let the market determine where you are. No one should be a perma bull or a perma bear, because it's very hard to do that. There are people but they have to have the discipline, that even more so than what we're saying now, even further discipline. I'm only going to trade when my thesis actually makes sense. They realize that the market doesn't only go up or the market doesn't only go down. It's that they have a bias to one direction. They trade one direction. I trade either direction. I even like sideways movement. I'm okay with that. I'll trade sideways all day. I love a range. Find me a good stock that likes a nice 10% range, and I'll trade that all month. So that's part of it. Is I do think, though, what I've moved from is where I was warning people more of, caution, to now I'm saying, look for signals that the market that institutions, and not that retail, that institutions are starting to move back in, because they don't do it all in one felt swoop. Right. And they don't do it at 9:30 in the morning, because at 9:30 in the morning, they've either done their trades at 6 a.m. or they're going to do it at VWAP all day throughout the day. That's how they buy. They try to buy at VWAP, the value weighted price when they're getting into positions, because they don't buy, if Warren Buffett's going to buy 1 million shares of Coke, he doesn't do it in one trade. He does it in hundreds of trades. So, you'll start to see these things that will happen is they'll be more immune to the volatility. So when the next bad news comes and it doesn't start to affect the market negatively, whoa, wait a second. We got bad news yesterday. It moved everything down from up 1% to down 2%. There was a 3% swing. Now there was only a slight hiccup. Oh, that means it's institutional money and they don't spook easy.
Right. Yeah. And, just understanding those dynamics. And while there is a lot of sentiment in the market, not being sentimental as a trader is art.
Yeah, it is. You get emotional. People, I have so many people that I've seen on this downturn of Tesla and others that get mad at it, and then they're mad at Elon. Although I can understand that to a point, because I think a CEO should be a CEO, and that should be their number one job, and that's what they owe the shareholders. But that's just a story for a different day. And I don't hold any Tesla, so I'm not bitter or anything there. I just really do. I don't think. It gets me mad when CEOs that earn large money aren't working day to day in their operation. They tell everybody else to go back to the office, but they're not at the office.
Yeah, I mean, Tesla used to be my favorite. I used to trade Tesla, when it was like around $1,000. I loved that. This was just such a nice, easy stock to trade. It was perfect. And then when they split, and a lot of retail traders that started getting into it, it became a hot mess. So I stopped trading it for a while, and then I started trading it again. And right now it's definitely a hot mess, but there is still a lot of money to be made. I mean, when Tesla
I called it at 251. I said to buy it this morning when it was at the lows. Now it's at 283. We were really happy when it was at 262. When I was looking at it earlier, I hadn't watched it, and I did not get into it. I went in, like I said, I went into the Qs. But I mean, it just, it just looked like it was just the selling. It was just overdone. There wasn't a good technical to give me a reason why, except for 250 is a historical floor for it. So I looked at it and said, at 250, if it bounces, I like where it's going to go. And I didn't follow it, but it's had a nice run from there, because at that point it was down 4 or 5%. So it's been like a 10% swing.
One stock that I have been watching for several months, weeks now, and that has been like immune to all this dropping is TSN, Tyson Foods.
Yeah, well, most of the food companies have been, and a lot of that because so much of their stuff is done domestically. In other words, and I get the chart here. Hold on.
So I am watching it for some powerful breakout, but actually, ideally, I would want to get it on the pullback. But this thing just won't budge. It's just
I mean, so all the food companies, Pilgrim's another one that falls into this, and I've even seen, Procter & Gamble was doing well, Lamb & Weston was doing pretty well. All of those sort of companies, same thing, fast food. What I wouldn't want to own long term is not bad on any dips right now, because again, McDonald's buys almost all of their stuff domestically. They do almost all of their sales in the U.S. So they are the most defensive sort of stocks out there. You wouldn't think that with, RFK in there. But look at this move it's done. March 19th, it was trading at 295. It's at 312.
Yeah. So what I didn't get McDonald's, but I don't know if I mentioned it to you earlier, but I did get Cava.
Oh yeah, there you go.
That's CAVA, and it's just
from my neck of the woods in DC. Yeah, big fan of their stuff.
Yeah, so I got it on March 13, actually at 75.09.
Wow.
And I'm holding it because I just love the chart, and I think it has a lot of potential. So and those type of opportunities, like if you keep getting
that's a lovely cup and handle right now.
I know. So
don't want to jinx you, but
no, I mean, like I'm holding it for sure. Like my target is long term. This is a swing trade, for a longer term. I'm not saying investing, but I don't consider myself a long-term investor, but definitely with this kind of setups,
Yeah.
I have full trust and confidence. And this is also where you have to detach yourself from that narrative of, I mean, this thing was going down, right? It actually almost made a cup and handle before. Look how pretty it was, right?
Yeah.
But then it completely got destroyed.
Yeah, it started one there.
Yeah. So
Yeah,
like
and this is a favorite of as we just had Kirk on, and he was talking about some things and how right now they don't move the needle tremendously, but how millennials more and more will. This is a favorite of sort of that millennial crowd
yeah.
that helps move. So if they've put the bottom in, and now institutions will start to get interested again, you could see nice upward move here from Kava for sure.
Yeah, and I love that spike on volume a few days ago. I'm like, I love to see this. I love to see that. And the way that it's setting up, I think it's really good opportunity. But we will see. We will see what happens. Of course, I'm being aware and watching it. But yeah, so far so good. And I think that's again another thing about don't attach yourself something. Yes, I have my target. I have my target far from here. But if it's not going to work out, I am not going to sit there watching my profit go all the way back. You know what I mean? It's like
Absolutely.
You got to be able to pivot. Speaking of detachment, on Friday we have a new podcast coming out, and it will be about detachment and letting go. So another conversation with Greg Singleton, and I'm really excited about it.
That is
Confidence in Trading podcast on all major platforms. If you guys haven't seen it yet, I strongly recommend to check it out.
You have it to pull up on your computer?
I can pull it up.
Okay.
It's on my website, Head Coach. Let me see. Podcast. Yeah, I can share my screen. Let me see. Present. Share screen.
Oh, I stopped mine. It's going to make it a lot easier. There you go. It should say present.
Oh, okay.
Screen.
I think I can do that. There we go. Yeah, I can see it here.
There you go.
Perfect. So confidence in trading, and you can go to my website aheadcoach.com, and on the menu here on top you will see podcast. So this is where it takes you to this page, and then you will see some other episodes. But if you go there and subscribe, then you will get a notification on Friday when it comes out, and it will be about detachment.
Awesome.
And letting go in trading. Another news that I have is I'm opening my program for enrollment again. Let me see. We got the group program here. The Total Transformation Program is the Rise Up of the Profitable Trader. And I'm going to open it for enrollment at the end of this month. So if you want to get notified, because I will be inviting people and telling more about it. If you want to get an invite, just click on that, and there will be a button here, down here. You can join the wait list and just give your email, and then I will send you an email when it's ready, when the enrollment opens, so you can get more information about it.
Awesome.
Yeah, this will take you basically to this, and you just fill in your name and email address if you are interested. So
absolutely, I recommend it highly. As everybody knows, I am the biggest fan of Agnieszka there is out there. She has helped me so much balance, my trading and work life, and sort of get that together, which has made me a better trader for sure. See, look how calm I am today. And supposedly the world's falling down around us.
Yeah, I'm very excited because I have some, really, really good examples of traders who are in the program right now. We are now on week 11, in fact, and within 11 weeks, it's just such a transformation. We have someone who has been struggling to get funded accounts for several years. He's a Top Step trader, and very speaking highly of StopStep because they're really supporting their traders. And he got, he is getting funded accounts one after the other. So within 11 weeks, he has got funded on 3 accounts, which is quite an achievement.
Yeah.
Yeah, so he cannot believe it himself. He already got his payout, and it's really absolutely fantastic to see that in such a short time you can get the transformation that big that really changes your life. Not just as a trader, but really changes your life, how you perceive yourself, changes the way you feel, less stressed, confident.
Right.
And you know that you can actually achieve your goals no matter what the market conditions are. I mean, people who, they came in with like, I don't have patience, I cannot stick to my rules, and all the things that most people are struggling with, right? Most traders. And now I see them in the morning when we have our, session, and they're like, yeah, I'm just waiting. I'm just sitting here waiting. Oh my gosh, it's just absolutely such a different person, different people. So
yeah, and I mean, I know no one gets more excited about the success also of her students than you do. So thank you so much, Agnieszka, for giving us all these great tidbits, and for giving us Kava stock here, because I am definitely interested in that now. So I'm putting it on my radar scheme. If it takes a little bit of a pullback here, I'll be even happier. Thank you so much, Agnieszka, and we will see you again next time.
Absolutely. Thank you so much, Howard. I appreciate it. Thank you.
And we are going to bring to the stage right now the man himself, the legend. We've got Charlie Moon. What's going on, Charlie?
What up, Howard?
How are you doing, bud? You must be having fun today, man. I know you love these dips to rip days.
Yeah, been all right. Good to see Tesla and Amazon making these huge moves. We definitely capitalized on those. Got a little bit of coin, even got a little bit of Newsmax. How about that, man?
Did you really?
Yeah, I bought a little off the lows and bought a couple hundred shares.
Sorry, I've gotten burnt on too many meme coins in my day. That's all that is at this point. You can't tell me that company is worth anything near what it's at.
Listen,
but I know it can trade here. Listen, how many years did you and I say don't fade the Musk? Well, it hasn't been the case for the last 6 months. It went pretty well for us for a few years.
Well, it's I think this is huge, right? This is a big reason as to why Tesla's been working lower. And, there was a lot of concern about Elon being overly distracted. And we've seen him making these moves. He's been consolidating a bit, right? News hit the wire, I believe, Friday that XAI bought out X in an all-share deal. Partly he's inflating the valuation of both companies as well. But this is to kind of get, the banks that loaned him a little bit off his back, make sure the proper valuation is sustained and maintaining so that, there's no margins on those loans. And again, I think partly having that consolidation is going to help him as he's looking to get back into the workforce.
Data immediately. They become, it's all about access to data, right? And no one's going to, Twitter, let's face it, it's where everything still happens.
Yeah, 100%. And, again, like we could just see like the delivery numbers today. I think in the last 2 delivery reports for Tesla, it sent the stock cratering to the downside. The initial reaction was negative. The initial opening prints were negative, but since then, Tesla's been doing nothing but going up.
Yeah, I loved it at 251. I actually set it on air, did not get in. I got on the Qs pretty early on the reversal off the lows, but I called that out, and then we watched it, and we were happy at 262 on the call out on air. But man, it's just been running and running.
Yeah, and Amazon could, they're right. They're not too far away. They're about $4 away right now from the 200-day moving average. This is a stock that we could also see looking to test on that 200-day moving average very quickly here. And this
Now, are
is
you a
going to be
guy that
big.
would trust any move up there? I personally be a seller at all of some of these levels of resistance. I don't know that we're out of the woods yet on the longer term. Although I've been bullish over the last couple of days, that I do think we're in a sell the news event in the opposite direction. That the world doesn't end tonight at 4 o'clock, and when we wake up tomorrow, we'll have our Wheaties and get ready to be champions.
Yeah, we have to also think about how the market has reacted to the thought of the news, right? And this isn't that far off from an example, a biotech stock that's been run up leading into the FDA announcement by the FDA is like, yeah, we approve this drug, and then the stock collapses 20%.
Yeah.
It's because the precursor was that the market had priced in the news, and once the news hit, they decided to take profits. And that's kind of possibly what we're seeing here leading into this so-called Liberation Day. The markets may have been aggressively pricing in the news of these tariffs. It's widely believed that China, South Korea are probably going to take some of the biggest hits, Mexico as well. But again, the thought process is that this has kind of been widely known. And we'll have to see, right, once Trump speaks from the Rose Garden today. But the market sure isn't acting like we're about to collapse. So
Yeah,
I mean, today. Hey,
well, look at that.
Rally dogs, baby.
The rally dogs are ready. Let's go. I love it. I love it. Or does that mean the Cubs just hit a home run? I don't know which one it is. Is that Kyle Tucker, man?
Let's go.
Yeah, but my other part is that Fear and Greed today was at 15 earlier this morning. I saw, and I haven't seen it that low since COVID, since like March 16th, 17th, 18th of COVID. So to me, I also feel that we talk about the path of least resistance. I think that's starting to swing to the upside. There's not much left to capitulate for a lot of people.
Right. And this is kind of, you go back to like the theory of like Warren Buffett. When people start panicking, that's when he gets really interested in buying for the longer term, right? And this is where I want to see kind of how Berkshire's 13F filing is going to come out, because they've been just hoarding cash, piling it into long dated bonds, and really exiting
trading houses.
Yeah, they've been exiting out of equities. So like, what happens? Well, all of a sudden, if Buffett starts to show interest in more of the tech names, there was news that he had taken out a position a while back in Netflix. It turned out to be his son's. He rode that for 100 points. Look at how big of a position he took in Apple. But would it surprise us that all of a sudden he's positioning himself maybe in something like Nvidia, something that he said that he felt he had missed out on? Amazon is another one he had talked about. And on these pullbacks, what if he decided to start buying the dip? I think more than anything, if Buffett's going to concentrate on anything, it could be the financials. I'm pretty sure it won't be Bank of America, but putting it into something like JP Morgan, which has been by far the leader in the financial industry over the last few years, it wouldn't surprise me at all. And we have to be, I know that Trump said he didn't care about the markets. I know that the markets have been working a lot lower. We've been breaking down, but something is starting to, at least in the short term for me, seems like there's a bit of a transition in the markets just based on pricing behavior in growth stocks, pricing behavior in Mag 7 stocks. And today is a prime example of, well, Tesla should be down, but it's way up. Amazon should be working lower, but they're pushing higher. And yes, both are moving on news, but both were performing well prior to the news as well.
Yep, I'm with you there. I felt the same way. I can't put my exact finger on it, except for that it just seems to me, this is like we said, when I want to be at that, I want to be here at the exit as everybody leaves the movie, and then they find out there was a third act and they want to come back in. I'll sell them the ticket back at a premium, right?
Yes, sir.
That's what it feels like to me. I just, that's how it is. We don't tell people what to buy and sell here, but I'm saying there's value to be had. Stock pickers are going to win right now. Charlie is one of the best there is at that over at
He's
Prosper Trading Academy, without a doubt, legend. Why don't you tell everybody, though, a little bit about what you do over there at Prosper, sir?
Yeah, so I run two different programs. I run a momentum stocks room. We generally focus early on day trading, momentum swing trading, both equity and options. And then my secondary room is a swing trading room based off AI technology. Basically, that is a LLM that is spitting out names every day. What we do is sit there early morning, analyze opportunities, weigh them against the technicals, kind of see where we could find, good opportunities where we have lesser risk, easier route to profitabilities. We call them profit pockets. Very, very different in terms of approach.
Right.
Not to be so Asian here, but it's a very yin and yang type of program in comparison to my other program. But it's a good balance. It's been very active, strongly demanded, and performance-wise, we've had our hiccups during volatility. I've been caught with my pants around my ankles a few times, but
Happens to the best of us.
yeah, I think I went like 4 and 8, and I realized something was just a little bit off. Since then, I've gone 11 and 1 with one
Nice.
open position right now. So you can see that even in the volatile markets, if we make the proper adjustments, it goes right back to being a well-oiled machine. So
That's awesome, man. And again, you can find Charlie at prospertrading.com. I should give him Mo's direct email just to mess with Mo.
exactly. Just tell him Howard sent you.
Yeah, tell him Hondo sent you, and he owes me for all those crypto picks over the years I've
Yeah,
given
there
him.
you go.
But there really isn't a better company out there and a better team than the guys over at Prosper. As most of the viewers know, we get Scott Bauer, their CEO and president, on a lot, and then Mike Shore is now joining us, Charlie, every Thursday, also giving us his views on the market. So we're happy to always partner with you guys. I will say later this afternoon, actually, we are going to be playing Charlie's trading tips for beginners. So we like to play some of these videos Charlie has. They're timeless, and they show you how to trade. We do have that coming up later, I think at 2:00 today, actually, on Quasar Markets Live. So make sure you tune in. Charlie, thank you so much for joining us. I know you're going to get back to those rooms. You're a busy man. Thank you so much, and we will see you next Wednesday.
I appreciate you, brother. It's always good talking with you, man.
Absolutely.